Are you looking to get a funded trading account? I know nowadays there are a lot of options for you. But here at Trader Funding Program, we do things a little bit differently. Plus, we're run by a group of traders that have decades of experience on trading desks and trading floors from around the globe. And we have a simple set of guidelines for you to follow with no hidden rules. And plus, we give you tools to help you become successful, like using ForexAnalytix, like being in a community of traders where you get to talk to people like me and other ForexAnalytix analysts all throughout the day. If you take an assessment during the month of July 2024, you're going to get a one-on-one consultation with me, Blake Morrow, President of ForexAnalytix. So join us today. I look forward to speaking with you soon.
Good morning, everybody. Welcome to the Flow Show. Here we are, kicking off one-man show. You're quite right, Michael. One man speaking for many. That's why I'm going to sell it anyway. Hope you're doing well. Let's get things up and running. Sorry, I'm a few seconds late. I was just reading a story about gold going on right now from India, which I'll bring to you in a moment. Right, where shall we start? Not an awful lot going on at the moment. Few headlines, so this might be a quicker show today than normal, but we'll get stuck into it anyway. We've had Bank of Japan sources already circling around. The piece brought by Bloomberg said that the Bank of Japan is said to see weak consumption complicating the rate decision. Others are saying that they're going to seek the risk of missing their hike chance. In the piece, it says some officials take the view that skipping a rate hike in July is an option to provide more time to examine incoming data to confirm if consumer spending will pick up as expected. Others hold the position that the BOJ should avoid giving the impression of being overly hawkish. Other officials are apparently open to raising rates at the July meeting, given that inflation remains broadly in line with forecasts. I think reading between the lines, we can say that we don't know what's coming from the meeting next week. If this sources piece is to be believed, then there's going to be a wide set of opinions over what they should do. It's just really going to muddy the waters a bit, but we may get further sources pieces over the days ahead into next week that might offer a bit of clarity, but otherwise clear as mud. Now, there's some potentially good news on the geopolitical front. Sort of. Japan and China, apparently vice foreign ministers held strategic dialogue on Monday for the first time in over 4 years. During that chinwag, they affirmed their commitment to advancing a mutually beneficial strategic relationship based on common strategic interests, which waffle talk for we're just going to talk nicely. Now, these guys have been at odds, particularly over the water release from the Fukushima plants in Japan that got China all hot and bothered, saying it was toxic water that got released and it's hurting fishing and all that, and that created a bit of a spat, even though that was complete horseshit, because the water that was released was fully clear and passed all international guidelines and laws and whatnot. But anyway, China likes to make a song and dance about something when they need to. So anyway, these guys are talking. It might turn into a thing like we had with Australia and China, where they had a spat with the Aussies, and then slowly but surely that's still being resolved, but things eased there, and they lifted tariffs on certain food and wines and stuff. China lifted tariffs, so maybe there's some easing of tensions, as I say, between China and Japan. But then, typical China, give with one hand, take with the other. They make warm noises towards Japan, but then they come out, their VP comes out and says they are in talks with Russian officials, and they're looking to improve bilateral investment cooperation, and they'll also strengthen planning and guidance of investment cooperation and provide guidance for deepening China-Russian investment cooperation. So as much as they're making friends on the other side, they're still letting everyone know that they're going to be staying firmly in bed with Russia. ECB's De Guindos says September is much better for the ECB to make decisions on interest rates. Another one with his bags packed for the holidays. And I was actually quite surprised. I was expecting yesterday to spend half the morning writing notes about all the other ECB members that came flooding out after the meeting. But there hasn't been many. So they've all buggered off on their holidays by the sound of it. The month before, I think we got 17, 18 of the governing council speaking a day after the ECB, but it's been crickets after this meeting. We did have ECB's Lane out as well this morning, but I fell asleep reading just the title of his speech, so no lines from that one. Over in politics in the US, so it looks like Harris might be the runner for the Democratic nomination. Apparently she's got enough delegates to seal the deal for her nomination. I don't know how it all works and whether anyone else is going to throw their hat into the ring. That may still be a possibility, but at the moment it's looking like Harris is going to be going forward for this election. In my mind, and any Yanks watching this morning, feel free to chip in. Harris is, in my opinion, just even just a protege of Biden, so it's no real change there, I don't think, to any rhetoric or policies or views, which still should put Trump in the lead as things stand, but a long way to go yet. Yeah, thanks, Michael. Right, Citi have been banging on about what's going on in the yen, and they say that intervention will grow if euro yen hits 180. Obviously, we've seen all the yen pairs coming down. Why they're pulling euro yen out the hat for this one, I've not read, but they cite 180 as the trigger level for further intervention. I am keeping an eye on the BOJ's index, yen index, which is trading 76.98. So that's still showing a bit of an improvement there. I think that's still one of the major watch points for intervention. We got to all-time lows in the 74s when they intervened the other week. So we're up near 77 at the moment. So some pressures come off that, might stay their hand for a bit longer. Goldies are out with their tea leaves, and they expect Thursday's US GDP to come in above the medium expectations of 1.9%. They expect 2.3% for US GDP, and we'll see how close they manage to pin their tail to the donkey. So not a lot of headlines really. This gold news I just mentioned, India is going to be or have cut their duties on gold and silver to 6% from 15%, just in a bid to get domestic prices lower, get activity moving a bit more over there, because obviously prices have been rising pretty high. So in real terms, 6% of 1,800 gold is a bit different to 6% of 2,400 gold. So anyway, it's two thoughts. That will bring down prices in India, but it also may mean that we get a bit of more of a bid in gold, or a little uptick in gold on that news, because then it effectively makes it cheaper for them to purchase it if they're not going to pay as much in duties to get gold. India is obviously one of the big gold buyers in the world. So that was the gold headline now. So, right, might as well start in gold while we're at the prices, because that's it from the news front. We are well within summer markets now on that front. So let's have a look at gold, which is having a little pokey back above 2,400. We've held, give or take, we've held this area of support. We've got some prior highs, prior resistance, prior support, just little bits and pieces. It did have a little poke through. under 90s, couldn't get that far below it. We're having a little move back above. It's looking a bit weak, the bounce though. What we want to see, or what longs we want to see, let's go in the shorter time frame, is this 2390, 2400 now just becoming support. If you start to see support building now, then maybe we're going to push up, but needs to clear this sort of 10-15 area as well, because we had similar price action. We had a nick under, then it started holding again, but you know, it couldn't make any gains above 24, and then it came under, then it held, so it's getting a little bit washed out. So really got to look at probably this whole area down to 80, 24 down to 2380s, that sort of thing, and just base your trading on that. If we get another move under 24 and it holds up around 90s, then you're gonna see 1, 2, 3 step ups that will start to build a bit more of a supportive picture down here. So if we get a move to 90s, it holds that, I would be expecting us to push back above 24 and maybe take out these 24.10 highs and maybe chew away some of this drop that we've seen. But if we do break that low and then break this low, then we're probably heading further south, maybe down to 2360s for that. So it's not out the woods yet, this one. I am getting a bit tempted to have a little nibble in the Aussie dollar. We're seeing copper stage a little bounce, and we're talking a lot about the commodity relations to some of these currencies at the moment. We've come back below this 66.60 is 45 line. Got a bit of the zone above as well. This level was a pretty strong level. It got a bit wishy-washy over the last couple of months, but prior to that, it was a very strong resistance area. You know, for the early part of the year, March, April, coming into May, it was a big old level, and then it broke, and then it held, and then it was under, so then it just waffled around a bit. We're back under now. We've hit a secondary level down at 66.20s, 25. We see we have prior lows there, and we've had prior action. It's not as big as the 66.45 level, but it's enough to warrant a bit of consideration. This has been a fairly decent move. It looks like it's gone quite far and that it may start to find a bit of trouble. I think perhaps if we hold this area, we should see a bit of a bounce, maybe give it down to 66, maybe even 65.85, where again we've had just a bit of support and resistance coming in against that. I haven't even got a fib on this one. Look at me, naughty. Let's quickly chuck that in and see where we are. So we just nicked under the 38.2 fib. If we start to hold below there, then perhaps we're not done yet. We might get a look down to the 50 fib, which is coming in around this area. So a decent bit of confluence around that level. This 66.45 area is already, we've had the break under, it's already resisting. So that's the risk. If you're going to be trying longs off here, if I try longs off of here, we're already finding a bit of resistance on the fib as well. So technically, it's not looking very bullish right now. It's looking quite bearish. So if I did a trade off of this, it'd probably be pretty small, and I'd want to be nicking pips off. If we got to there, then got to there, it would need a break back above there to get me relaxing on longs and then seeing where we want to do after that. And then we get into this zone, 66.60s up to 80s. As you can see, we had a bit of support there, then we broke it, modicum of support there, then we've just whiffled around a bit. So I would expect more resistance to come in here on a bounce, then the top of the zone, then up into the big figure. So yeah, I don't know how far it's going to go. Gold's obviously put in a little bit of a short-term bottom. So if that maintains, that might help the Aussie as well. As mentioned, copper, that's looking similar. It's found a little bottom, but it's bouncing. We've had these little moments all the way down. So I want to see something a bit more solid than just, you know, half hour's worth of price action. You know, we couldn't hold that prior low. So There's nothing in this trend that says it's going to stop yet. If we get back above this area, let me just chuck a quick line in there. Let's do that one. So we're finding this bottom now resistance. So if we get back above there and then we find a base on this level, that might give it the springboard. That might give it the evidence to say we've got a bit more of a bottom in copper, and then maybe we start to move up. But every time we've made a low, we haven't managed to really hold it, and then we've broken down. So that still need to build up the price action here for a bottom. But if that happens around here, then I might be a bit tempted to get in this Aussie dollar and see if we can get a bounce up off that one. Dollar China, I know we like to look at this one here. This is another one. Thought it might be off to the races yesterday. We were getting up to all 730s. I did have a little chop around 29.20s. I didn't do any more. And okay, locked a bit off further up here. Couldn't get up to the 30s. Now we're seeing it sagging a bit. So what I want to see is it holding above 28s. If we get back under 28s again, we're probably going to be doing this sort of thing again, maybe heading down to the 26s that we've seen before. If we get a decent bounce off of here, 28s, then I'll be looking for us to take out this high and get a move to the 730s and then maybe up to the 731s. If we get another move up here and it holds again, I'm going to chop a bit more of my longs, but I would be looking to reload down here, depending on how quickly it came down. If we come down here pretty quickly, it may be that the force of power is going to say that we're going to perhaps head through these lows and a bit lower. Gavin, I know you talk about gold. Yeah, if 80 goes, 50's definitely possible in gold. Though I've still got my lines in gold around the 60s. It's coming out to a bit wider. So we've had this 60s area, which has seen a lot of action when we came up above 23s. So that would be my thing. But yeah, you know, there you go, 50s banging there. There's these lows here. So you can always find levels in this thing in gold. Dollar yen, we're seeing that coming off again, and we're edging closer to the 55 level. I'm going to chuck this on the daily because I put this one in the room earlier. I know Kay mentioned it yesterday as well. We're just coming into the cloud once again, the bottom of the daily cloud. We had one attempt down here back on the 18th last Thursday. We're now having another little look down here. So this could potentially be a bit of a it could kick it into another leg lower if we get through there. If we get under, close under, open the next day below and can't get back above, we find this the bottom of the cloud resistance, then that's going to be another bearish signal, and then we're probably heading lower. Just under that, we've got the 100 DMA, and then we've got the 155, which, as we know, is a decent area. We've been around before and going way back as well. So that's my next big level. But some context is needed, despite, you know, we've seen a significant fall off the top. We're not close yet to putting this 2024 trend to the test. We won't do that until we get to the fib down here, 153.66, which is a bit of a natural. I'll just zoom it in a bit. Let's get shot in the cloud for now. Oh, where's it gone? There we go. So this fib has been a bit of a support area previously. We've had a little bit of support there, a bit of resistance as well. So it's a natural level, irrespective of the fact that it's also a fib now too. And there's a bit of, again, another area below 153.34. This was just on all this move up, places we ran into trouble, found a bit of resistance, so on and so forth. So this will be a fairly big area. Again, you know, when you're talking about intervention, the MOF, the BOJ, they don't give a monkeys about coloured lines on a chart. If they want to push it lower, they'll push it lower, and they don't care for our techs. So you still need to be careful when relying on the technicals for this one. Certainly as far as resistance goes now, we've had this move down under 156. I'd expect to see a little bit coming in here around 156, 15, 20. bit more up here, 60, 65, and then into this 157, 157.20. Those are the levels I'll be looking for to see that the price is going to, stick at. So I would expect to see, as I say, bit into here if we get a bounce, 156.20s, 156.65.70, and then into the 157s. But again, take it with a grain of salt. Now, just something I was chatting about in the chat room earlier. I was at a wedding with some of my mates and a lot of people I know in markets and whatnot. There has been a big drop off in yen trading, particularly of the speculative nature. Some of the people I know have seen sort of 25-30% drop in yen business, mainly coming from speculators or the speculative side of the market. It's also the time of year that's having an effect getting into summer. Commercial business, firms and people doing stuff to pay invoices and that sort of thing, that's still okay, but people are now wanting to get fills pretty quickly. They don't want to so much leave orders in, work better levels, and if they've got something to do, they get it done, because there's obviously the additional volatility going on here. So it's changed the market dynamics just for now. We've had these moments of intervention, and it always goes the same way. You get the intervention, it rocks the market gets nervous, people don't want to hang about, they want to get deals done that they need to get done because they don't want to end up, taking 5 minutes to think about it, and then they got 100 pips worse price. So you get that all the time when you get these intervention phases. The market just, jumps around a bit. Then it calms down and people get more relaxed and speculators come in and whatever. So as we were saying, we've got this volatility in yen still, and it just means that, 6 months ago, we'd get a 10 pip move, might be something in dollar yen. Now it's a 30, 40 pip move, 50 pip move, in the same way you'd get a 10, 15 pip move in cable or euro dollar. It's magnified due to lack of liquidity, higher volatility. So, to see this thing moving around 30, 40, 50 pips in minutes is to be expected right now. And if you're trading it and you're making money off the back of it and you're catching those moves, then all well and good. But we can easily see this jump in 50 pips as we can see it falling another 50 pips. Just looking at some of the crosses, as we said, City are looking at 180 for intervention, euro yen, and these yen pairs, particularly when it's fairly quiet like this, are having a bit of more of a drag on the majors as well. So we're not seeing the dollar overly bearish on the back of dollar yen. These yen crosses are all moving roughly in the same direction, so they're all dragging the majors along with them. As you can see, Aussie yen on a bit of a level here. That's one thing that's also limiting the potential for Aussie dollar to stage a bounce on the back of that. And again, if you want to know what's pulling any of the majors, it's always worth checking the crosses, because again, if we look at Aussie Kiwi, we're largely doing nothing. So we're seeing Aussie dollar dropping, we're seeing Aussie Kiwi dropping, but the cross itself is doing nothing. So you get an idea what's moving the market. That's why cross watching is so important, because you want to know which way the winds are blowing for any particular currency. I know some of you guys like the old dollar Swiss. So as you can see, we've got dollar yen coming down, so dollar Swiss going up. So it's not, you can tell again, it's not a dollar move that's mainly happening here. This will be because Swiss yen is on the move, and so we're getting the drag from that. Held nicely down into the low 88s. We've got a bounce now, getting up over 89s. A bit of a level up at 89.25, 30-ish. Well, probably call it 2030 maybe. Bit of an area. If it's going to bounce, got back above this 80s level, which is at 38.2 fib, which again, it's another one of those levels that was there even without the fib. It's a bit of a level. The fib just adds to what's there. So that's looking a bit perky as well. But again, you got to think about what's really moving this. It's not going to be the dollar at the moment. Looking in at oil, because I'm in this zone where I have to look at other things before I want to trade something else. So I'm interested in trading dollar CAD from the short side. And dollar CAD hasn't been trading oil very much over the last few months, but now it's in the grip of that. Oil still looking fairly weak. So obviously the Luna is looking fairly weak, and we're nudging up against this resistance area here, 70s, 80s. I am tempted. I'm very tempted with a short, but until maybe I see oil stabilising, and obviously we've got the Bank of Canada risk tomorrow, I'm just holding off. I don't have high conviction right now because I don't want to tap this and then oil dips and the BOC uber dovish and we're up at 139. So I'm just a lack of conviction. But as I'm also fond of saying, don't spend too much time, watching other assets to trade another asset. If you're going to watch those assets that closely, trade that bloody asset. So I'm only really looking at oil just to see what winds blow in the Luna at the moment. At the moment, it seems like the weaker oil markets are having more of an influence in the CAD than it has been of late. So if that influence is strong, it's going to give me a bit more caution to trade the currency as well. And guys and girls, if you want me to have a look at something in particular, throw it up there. Happy to have a look at it. Otherwise, it's just me waffling on in my own world. And what a funky world it is. Dollar MEX, I wouldn't say hoping, because hope is not a strategy. I was looking forward to the potential for this one to get down to this 1740 area. That was a level I really wanted to trade. But it doesn't look like we're getting there. We have seen a decent bounce here. Call it Trumpomania, whatever you want to call it. The possibility of him coming in. We've seen some weakness in the MEX. We're still in this downtrend. So we got these lower lows, lower highs, lower lows. So we are seeing a turnaround in the trend, but we're back above the 50 fib of this one. So we've had a little move. So it's a bit on the fence at the moment down here. We can't get above the 38.2, and we're struggling to get above the 18 and hold that as well. So it does keep the downside pressure on. So maybe we would get a move down to 1740, which I'd like to give a go. Obviously, judging the reasons why we're down there at the time. It could be if we break this low here, down to the 1760s, that we do get a shove down there. But I want to know why we're moving down there. I'm not just going to blindly trade it. It's all right to say I'll trade it now, but 5 days time there might be a different reason why we're down here, and I won't want to trade it. But for now, that's the area I'm looking up from that one. You lightened up on dollar MEX yesterday, Michael. Still looking to 1740 as well. Yeah, I think there's a lot of eyeballs going to be on that one. Marcus, dollar rand, no problem. Oh, if I can get it, there we go. Let's come out a bit on that one. Let's go on to have a look what's going on the daily. So a bit of a level here, 1840s. Not a big level, just one of those, it's seen a bit of action. So it's one of those I like to monitor just to see sometimes when you've been away for level, when you come back, you tend to see it doing something. Obviously, 1850 is the big level for this one. And we got that nice, call it a double bottom. I'm going to exclude that spike. Got a nice double bottom down at 1790. It's a bit in the middle here. If I don't know what side you're trading, Marcus. If you're long off the bottom here, then that's great. You probably want to ask a question into this level, into 1850s. If you're looking to get in shorts, this would be an area to look at here. You don't need to give it much room. Got a level above 1865s. Above there, then shorts are going to look quite wrong on that. But if that level does hold, then you could see a decent pullback. But again, you use these little levels in between as areas to maybe take some profit or park your risk against, depending on which way you're trading. And if we get a move back down to 1790s, you're going to want to see that holding. What you'd really want us to do is, if you're long from down here, you don't want it to be getting under 18 again. If we have another move down, and again, depending on what's driving it, I'd want to see support coming in at the 18, not here, because these buyers, that's where they'll be looking to protect it, around the 18. If not, then that's your bit of a line in the sand. Bust under that, these two lows, there's probably going to be quite a few stops there, and we might be also heading down to the 1740s in this one as well, a bit like the MEX. So that's a level. Funny how these numbers all crop up in different pairs. 1740s MEX, 1740s in the Rand. Amazing. That's the text for you. Let's have a look at some stocks. You're long at the bottom. TP 1865, Marcus. That's a very nice trade, mate. I hope you're taking some partials along the way. 1865. That's right on the level. So be mindful if you're trading against levels. If you've got a level, you don't want to get to 16, 64, 80, and it hits resistance, and then it pulls back again. So just if you've got TPs, my advice would be don't stick them bang on levels. Give it a little bit of room. I'd rather get some off at 18, 64, 50, 64, 80 in case it slams into that, than wait for an extra 20 pips and fail, and then you've got nothing in the bank. So yeah, be careful where you put your levels. And as Ali says, and as I say, do your slice and dice. You can always take a little bit off and then wait for your profit target, something like that. Many ways to skin the cat, as we know. Stocks, going to have a quick look at that. Let's have a quick look at yields. Always keep an eye on what they're doing. 10s still holding above this 420. So in your pure simple terms, if you don't understand yield curves and what happens at front ends, back ends, middle ends, up ends, just stick to the very basics. Look at your 10-year yields, look at your levels on that. Forget the moving averages. I don't do tech on yields. You do tech on price. These lines are just to show reflection of what yields are doing. So yeah, if you want to do techs on bonds, you do it on the price, because you trade the price more than you trade. Well, you can't trade the yield; you trade the price. That's what you can actually physically trade. They're holding this 420, so it's keeping things steady for now. S&P. Let's come into that one. So we found a bit of a bottom down at 55s, the big figure. That was a bit of a level previously. It's, again, as I keep repeating, it's all about price discovery. Where are the levels coming in? We had a little bit of support, 55.20s, as I mentioned last week. We're back above there. Now, where we run into trouble, we're running into a bit of trouble up towards 55.70s, which is an old break point, support point there. So again, we're still in this bit of a downtrend, lower highs, lower lows. We're not breaking that just yet. Get back above there, and then maybe we're turning this around again. But until we break these highs and this area back into the 50-60s, I think we're probably going to find sellers coming in ahead of these levels. So to get back to making fresh highs, we need to get back above these lower highs. But you know where the support is coming in, pretty much on the big figure down there. That's going to be your main level. But again, as I said a moment ago, you've got this area where you've had a low, a fresh low, we've come back above, and now we're holding it. So it's that stepping up feature. This gives you a bit more conviction that we might be making a bit of a bottom. So if you're wanting to get long, you weren't long down here, this is your area, 55, 28, 25 against these lows here. The market goes below that, we're probably going to test the 55 again. If it holds there, that'll give it a pretty solid springboard to then maybe take out these highs if we haven't already. So this is a sort of price action you want to watch when trying to pick bottoms. Some lows, a new low, then holding that prior low. And the same thing you do up top. You want a high, you want to hold the high, not break the high, and then break the high again. So yeah, that's what you want to look at price action wise for that. I know some of you like to look at the FTSE, which is, I don't know why I bother. It's sitting right in the middle. Those moving averages, nothing, flatlining. So that's not doing anything. We're not even getting down to the areas of these mid ranges now. So it's lacking a bit of volatility, a bit of liquidity as well for that. Right, boys and girls, anything else? What's Ali up to today? Oh, we haven't looked at cable. A short cable at 29.26. Let's have a look at cable. Okay, so you're short. That's not bad, Phil. Ali, you got some money on the table. Where's your take profit? Just under the big figure. 4 pips under the big figure. Yeah, so 26 is your TP is just below these lows. So you got a pretty tight trade here, Ali. So just think about maybe the big figure, because we're not getting down at 29.05. And because if you want that TP at 96, if you break in 29.05 and the 29 big figure, you're probably going to get a bit more out of it. So there's 2 ways you can play it. You can take a bit off 29.05s, 2900 in case you don't get your TP. And if you do that, then you can maybe let it ride for a little bit to see if you do break it. And if it does break, you can always take a little bit more off. But I would think if we break here now, you're going to get a bit more than 28.96. So you want to try and push that trade as much as you can. You don't want to get finally get TP'd at 96 and then the next trade is down at 28.50 because you've missed out on all that potential profit. So just think about your levels there, mate. Think about your lines. And your long dollar CAD at 72. I'm assuming that's 137.32 your stop loss. You're long at the top, mate. As I just mentioned earlier, it's a bit of a resistance area up here. So be a bit careful with this one. If you get the break, then yeah, you're probably going to see 138 next after that. Yeah, be a bit nimble with that one, mate, because as I said, with oil looking a bit weaker still, you may get that move higher, but if that's starting to bottom out, then you might get a bit more of a firmer top up here for dollar CAD. Right, well, if there's nothing else, boys and girls, it's a pretty quiet day on the calendar. There's what have we got out? NAFL out today, so a bit of a quiet one. No Fed speakers. Oh, we've got some housing data coming up, existing home sales from the US. Not one of the big ones, but we'll see if that's followed the starts and permits we got last week. You can forget that Eurozone consumer confidence. It's been positive 5 times its entire history. So, but it's expected to be less crappy. All you Eurozonians out there, are things less crappy in the Eurozone for you? Anyway, we're expecting -13 for -14 prior later on. So if that's that, we should call it a day. I've had enough of the sound of my own voice. Have a great day, everybody. I'll be back again tomorrow. Cayman's not back until Friday, I don't believe. So do get your questions ready. We can talk about anything. Doesn't have to be charts, markets. You've got a question about trading in general, then get it prepped, throw it up, and we'll have a chat about it if it's all going to be quiet again tomorrow. Have a good one, everybody, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.